Hey, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. Welcome to Next Level Charting. So today I want to talk about a trend following indicator. Actually, it's an old indicator, and we're going to use RSI for trend following. And we'll apply it to Apple, Microsoft, and Amazon, as well as Google and some other big stocks. I presented yesterday to the CMT Association, that is the Chartered Market Technicians Association, and the presentation was entitled RSI for Trend Following and Momentum Strategies. And that presentation video is available to members of the CMT Association. And so basically I went over classical RSI. I broke it down so we could understand exactly what RSI is telling us. And then I made some adjustments to RSI for trend following by comparing the characteristics of trend following strategies to mean reversion strategies. And then we got to the meat of the presentation where I built out a trend following strategy using RSI and made some incremental improvements and showed the backtest results using stocks in the S&P 500. This presentation is also available to subscribers to TrendInvestorPro.com because I have uploaded it to my website. So on July 29th, which was Wednesday, I put out an article that featured a chart for Apple with 65-period RSI, which forms the basis for this strategy that I presented. And here you can see that chart. And if you're a StockCharts member, you can click on that chart to see the settings and recreate it. So you can see there's a 5-day simple moving average of 65-day RSI with lines at 51 and 49. And there are also links below to trendinvestorpro.com if you want to see that presentation. Of course, you have to subscribe. But I'll go ahead and show you how I created this chart using a 5-day simple moving average of RSI for trend following signals. So there's the signal for Apple. You can see you got a sell in the middle of March, but that reverted to a buy in the middle of April. And trend following systems, they're going to get out after a decline, and they're going to get in after an advance. They're always lagging. That's just the nature. They make money because they catch the big trends, and the trends that they catch pay for the losers or the trends that didn't work out. So we can see the 5-day moving average of RSI 65 crossing below 49 there, and then staying low, and then moving above 51 in mid-April and holding that as the trend extended here. So how did I create this chart? Well, if you scroll down, or I'm going to scroll down and look at the settings here. So if you look at that indicator window, you see I've got RSI 65 twice, and I've got a 5-day SMA. So here's the indicator, RSI 65. And I set opacity to 0 because I wanted to hide the actual line for RSI. And I've got a simple moving average added, 5, and I colored it green. And so to get the horizontal lines, I had to add RSI again and place it behind the other RSI. And then I added the horizontal lines at 49 and 51. So RSI is basically invisible. And all we're seeing is the 5-day simple moving average of RSI there. And it's going to miss some trends, but it's going to catch some trends like any trend following indicator here. But I like 3 months because that's kind of like the first sweet spot, if you will, for trend following systems. 3 to 6 months is my sweet spot for trend following systems. And the market is moving very fast these days. And so I think we need the shorter end of that sweet spot. And I think 3 months captures it pretty well. So I put together a chart list. It's the stocks in the S&P 100, and I've got it sorted by weight. So there you can see Apple up at the top left, 8.84% of the S&P 100. It's also the biggest stock, I believe, in the S&P 500. And the reason I've got this sorted by the weighting is because the first 4 stocks I'm going to show you account for 20% of the S&P 500. Now that's a really big chunk, and it's justified this time because they do account for around 20% of the earnings in the S&P 500. But the point is that with such big weightings in these four stocks, the market is going to move in the direction of these four stocks, especially the NASDAQ 100, which is even heavier weighting as far as these four stocks are concerned. So the first up is Apple, and we can see that it is a bit extended. It went from the 220 area to the 400 area with just really short pullbacks along the way. We didn't get a decent correction, and this is still a short pullback. And we can see here, if we got a normal pullback in Apple, we would return to that resistance zone, and there's a little consolidation in May, June, so we could pull back to that 320 area. And you could put your Fibonacci retracements from this low to this high, and my guess is that's about a 38% retracement. So that would be the idea for Apple on a correction. Now, as far as trend identification is concerned, we've been in an uptrend since the middle of April when the 5-day SMA of 65-day RSI crossed above 51, and that will stay until we cross below 49. And as far as trend following signals are concerned, we don't question them. We just take them as they come and let the chips fall where they may after the actual signal. So Apple it's still in an uptrend, but it looks vulnerable to a correction. And that's kind of the consensus for these other ones. So here's Microsoft. It's another tech titan, and you can see that it had a bearish signal there in the middle of March, but flipped back to bullish a little bit earlier than Apple, I believe, and has run up. Now, Microsoft had a nice little consolidation there in May into June, and then got a breakout and moved to new highs. And now it's kind of pulling back. So, this could be some sort of a flag pattern after this advance, and a breakout would technically be bullish. But we have moved from 135 to 215 without much of a correction. And so a garden variety correction could return back to that 185 area. And as far as trend identification, this would not reverse unless we move below 49 there in the 5-day SMA of 65-day RSI. So now we move to Amazon, and Amazon is actually the strongest of these three so far. And why is that? Well, a couple of reasons. Mainly, it triggered bullish at the end of March, a couple weeks earlier than Microsoft and Apple, when the 5-day SMA of 65-day RSI moved above 51. So it was quicker to turn bullish, and it stayed bullish and moved to a new high. You had a little consolidation period and then a breakout, and now we're in some sort of a consolidation after that big move up. Maybe it's a pennant, and a breakout there would be bullish. So the uptrend is still intact there, and you're still well above that 49 level, which you would need to break to actually reverse that uptrend. And keep in mind, with trend following, you're never going to get the exact top or the exact bottom. You're always going to be a little bit late, and you're trying to catch the meat of the move. But even though, the trend is still up, you can see that Amazon has moved from 1,700 to 3,300. It's basically doubled. And it's consolidating and maybe ripe for a breakout. But even a normal pullback could go to this 2,700 area. And if RSI gets, back around 51.50, that might be a buying opportunity, because that would signal a pullback within the uptrend. And now we get to the other stock, Alphabet, alias Google, and the symbol, of course, is GOGL. But what we can see here is it was the last one of the big four to trigger bullish, because RSI did not cross above 51 until May. And it remains above 51, so it is yet to trigger bearish. But the fact that it was the last one to trigger shows you it was the weakest one off that March low as far as momentum was concerned. And if we look at price action, you can see we've moved from basically 1,000 to 1,600, 60% advance without much of a pullback. We did have a consolidation period here and then a breakout to new highs. And now we're kind of stalling at these new highs. So the trend is still up here. I would say there's a lot of support there in this 1350 area, and that would be the first place to watch for a pullback, if RSI gets back to that 50 area. But if RSI breaks below 49, that would signal a downtrend. And that's why I'll be watching this indicator going forward for these 4 stocks, because if 2 of the 4 break 49 and you have half of them in downtrends, that's going to weigh on the market. Now let's look at some of the other top 10 stocks in the S&P 100. Here is Facebook, and Facebook is actually lagging because it didn't peak here, but it did stall out since May. It's gone nowhere. And so maybe it's a bullish consolidation. If you're a Head and Shoulders fan, perhaps we've got an inverse Head and Shoulders. There's the left, there's the head, and there's the right. And if you get a breakout around 240, that would be bullish there. And you can see that the RSI indicator, smooth RSI, triggered in the latter part of April, the end of April, early May. So it is still in an uptrend here. Then we look at Johnson & Johnson. And this one looks kind of interesting. You can see you get whipsaw signals here. So we got bullish here in early April, but we got a little whipsaw there with the June pullback, and that is going to happen. But we're back in bull mode with that move above 51. And if you look on the price chart, it looks like some sort of a correction. So you got this big advance, 110 to 155. That's about a 50% retracement, and we're breaking out. And so this little breakout zone becomes first support. So this one is looking like a fairly fresh breakout in Johnson & Johnson. Berkshire Hathaway is in some sort of a basing process, and you can see RSI just moved above 51 for the first time since late February. So this one broke down there in late February, early March, and it's just kind of been moving up. But, it's really a laggard. There is an uptrend working here, higher lows, and you've even got some higher highs. So you got some sort of a channel working, and it looks like it's prepared to test the top of that channel. I think Apple is a big holding in Berkshire, so it might be at the whim of Apple. Now, remember, we are right in the middle of earnings season, so a lot of these stocks are going to report. I think 3 of the biggies are reporting today, but Visa has a potentially bullish setup working, the big surge, and then what looks like a consolidation. So a consolidation within an uptrend is typically a bullish continuation pattern. RSI has been bullish since the middle of May, so a breakout there would open the door to new highs for Visa. And for the last 2, we have Procter & Gamble, and it has a consolidation after an advance there and a breakout and a new high. And that is the biggest stock in the consumer staples sector. And then we have the second biggest stock in the finance sector, and it kind of looks like Berkshire, which is the biggest stock in the finance sector. It's got the uptrend working, but it's really lagging and remains on a bearish trend signal. All right, so that concludes this edition of Next Level Charting. Check out trendinvestorpro.com if you'd like to learn more about that RSI trading strategy. Thanks very much for tuning in, and have a great day.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.